What is up, everybody? It's Richard here, checking in with another new video. So I think this is the first time in the last wee while I've done 2 videos in 1 week, but it just popped into my head, so I thought I'd put this out there. So yeah, I've had a great response with my last video, you know, about the coronavirus bounce back loan. So if you haven't seen that and you are a business owner just now and your business has been affected by the COVID-19 pandemic, go back and watch that video. It was my last upload. I don't know how to do the thing where the video pops up here and you click it and all that. It's kind of beyond my gambit, but if you're looking for more advice and information on that loan and how you can use it, 1, if you're a struggling business, and 2, how you can invest that loan, go and watch that video just now. So today I'm going to be talking about something. Oh, let me move my steering wheel, it's kind of annoying. So yeah, I'm going to be talking about something today which is kind of a conflicting opinion for loads of people, especially the more old school people. Like, I know if I was to talk about this to like my grandparents or something like that, they'd probably disagree with me, but it's something that I've been doing for a long time and people always ask about when I mention it. So today I'm going to be talking about why I use finance for cars and also why I use credit cards to make the majority of my purchases. As always, my little disclaimer just before I get into the main body of the video: everything I'm saying here is just my opinion, it's not financial advice. Whatever I choose to do with finance, credit cards and all that is my choice, the same way whatever you do with them is also your choice. If you choose to take them and misuse them and can't keep up payments and whatnot because you've tried to implement what I do with mine, unfortunately, I cannot be held liable for that. You need to make sure you're choosing to use credit cards or finance on the basis that you know you can afford those repayments. So, to get something clear, this isn't me saying that buying stuff in cash is a bad idea. I know guys who are far more successful than I am that could go and buy, you know, a Rolls Royce in cash and have done and will probably continue to do. I know guys just as successful as those people who would go and finance those cars as well. So I'm not saying that buying cash is a bad thing. Loads of the guys I know who buy cars and stuff in cash as kind of like a show-off thing. They're like, oh yeah, like maybe they think finance is like a stupid thing. And you know, if you're a young man like me and you're in car forums on Facebook and all that, people are always like trying to roast guys for having financed cars and stuff like that. But there's a few good reasons why you would use car finance. That's what I'm going to talk about first. Then later on in the video we'll talk about using credit cards. So let's take my current car for example. I've got an A45 AMG. Nice enough car, especially I think for someone my age. I bought it at the beginning of last year and I'm pretty sure the sticker price was like £25,000 or something like that. I put just over a 10% deposit down on the car and financed the rest with a company called Man Island. So the reason I done that, loads of people said at the time, like, oh Richard, if you're making like decent money and all that, why would you not just buy it in cash? And you know, I get where you're coming from, and that's probably something 18-year-old me would ask 23-year-old me now. You know, I guess it's also like people being skeptical or whatever, but the reason I've done that is very simple: working capital. It is really that simple. Now, cars aren't an asset in the way that, you know, an investment property is. I don't even really include your own home as an asset. That's just my opinion, but like, a car can be a working asset if it takes you to your place of work, or you use it for deliveries or whatever you do, if you have a van and you're like a tradesperson. But a car generally will not hold its value. Even if you look at super luxury cars, Rolls Royces, Maybachs, all that stuff, they all fall in price. You've obviously had your odd cars like that crazy old Aston Martin that's worth a lot now, and the Lamborghini Miura, Paganis and all these cars, but your general run-of-the-mill car, 99% of the time, is not going to hold its value. This car, I believe when it first came out, was like £45,000, £40,000, something like that. And for a hot hatch, that's pretty expensive. The new one's like over £55,000. And it just goes to show cars do not hold their value. Also, I don't buy cars brand new. Never have. I don't think I really ever will. That's a topic for another day. But yeah, I don't buy cars brand new. So when I'm talking about working capital, what do I actually mean by that? If we add together all the costs I had to acquire this car, and my insurance was already paid in full, so I just had to swap this over. All I had to do was put the deposit down and pay a small fee to change my registration plate over. That was it. So let's say I'm left with £22,000 left. That's £22,000 of working capital I can then go and use on a property deal. Or if you're a different type of investor, a different type of business person, it's £22,000 you can go and use for something else, getting assets for your company or whatever. If you're doing like some type of more creative, non-traditional sale, some of the more experienced kind of property guys and girls watching this will know what I'm talking about. £22,000 is more than enough to go and do deals with that. I've done probably my best small money deal was like £14,000 in, £12,500 profit. Like, there are deals out there that you can make with that kind of money. especially if you know you have more money in your company. So obviously I wasn't getting a car the total value of all the money I had other monies in my company. So that's £22,000 I can then get into a bridging loan to go and get another deal, or go and get a regular run-of-the-mill staple lenders mortgage product as well. So if you think about it, let's say I added that 22k back into the rest of my monies, and let's say I had £50,000 in total. I then got a bridging loan on a property. It was going to return me, say, £20,000 of profit. Well, my car is only £365 a month, £365 a year, so it's about £4,000 a year. So if all I was looking to do was pay for my car, that's my car's payments pretty much for the next, like, for actually the whole duration of the agreement in this car in one deal, just by adding those monies in. And if I went and done a non-traditional deal and I took that 20k, put it into something and got 10 back, well, that's me just put £10,000 of profit. That's my car paid for the next 2 years, and probably the insurance for those years as well. If we look, I'm planning on changing this car out. Obviously, I'm not going to say what I'm getting because, one, I'm not a fucking bell end, and two, I don't have it yet, so it's technically not mine. But the car I'm looking at getting now is just under £50,000, and I'm going to do the exact same thing I've done before. 10% deposit, same lender, all that kind of stuff. My payment's going to be slightly higher, you know, 700 quid a month, just over that. But when I put that deposit down, I'm going to have £45,000 left over. I could even go and acquire 2 cheap units in Glasgow for cash, which I wouldn't do, but I could do. And those 2 units could do, you know, 350 quid each, little 1-bedroom buy-to-lets. Put those 2 together, 700 quid a month. Take my contents insurance and all that off it. I'm probably only paying 100 quid towards the actual car that I've just got because I've left myself with working capital. When you take it even up to the next level, so guys I know with Bentleys, Ferraris, McLarens, all these kind of cars that are like, you know, would make any car I've had and probably will have for the next couple of years look like pennies. Guys with, you know, Rolls Royces at £450,000 after all optional extras. Well, if you go, and if it's a brand new Rolls Royce, you're probably going to be needing to put a little bit more of a deposit down. Let's say 20%, so you put a £90,000 deposit down. Well, less that from 450k, so you've got £360,000 left. You could build a portfolio with just that money in Glasgow to pay that car every month if you wanted to. I can't remember who it was, but I seen someone, you know, who'd done pretty much exactly that. Really nice exotic sports car, £200,000 car. Paid a small deposit, bought a couple of properties to cover the payments. At the end, when he hands that car back, and if he chooses to buy it, obviously I use a PCP agreement, he still has those assets. Those assets are potentially going to appreciate over time. They will be able to, you know, you could refurb and refinance them, add value where possible, create instant equity that way, or pull those funds back out. So it just kind of makes sense to me, one, because my car is going to depreciate. Like, I bought this car for £25,000 last year, and it's only worth, like, I don't know, about £19,000 or £18,000. Now, they're always going to go down in value, and if you're buying a car expecting it to stay the same price, you're probably a bit fucking lost in the car market. So when you think about that, it's good having a car cash paid, I imagine. I mean, when I used to have cars that were like 500 quid in like my old van and stuff like that, I just paid them in cash because they were all under £1,000. But when you're looking at stuff, you know, 20, 30, 40, 50k and above, having a kind of a deposit and a monthly payment is a great idea when you want to leave yourself with working capital, as long as you use it appropriately and create residual cash flow coming in every month you can use to offset the payments on that asset. Or not asset really, because I called cars not assets. Now let's talk about credit cards. So my first ever credit card was a Debenhams credit card. I didn't actually know what it was. I was buying my mum a present for Christmas. I was maybe 19 years old, and the woman behind the counter asked me if I wanted a Debenhams card. I was like, you know, I come here like every year to get presents for my mum and my gran, and, you know, like go to John Lewis and all that stuff. So I was like, yeah, I'll take one. But I filled out like about 10 sheets. I was like, what the fuck? Get this card in the post, MasterCard, credit limit 500 quid. I was like, oh, what the fuck, shit myself. And but that was my first step into using credit. Didn't understand it. To be fair, I don't even think the woman behind the till really knew what she was putting out, but I just kind of used it and serviced the minimum interest every month. I didn't understand that you were meant to pay it off in full and all that, and for sure I would definitely say I misused that credit card. It was probably 18, I got it 18, 19, something like that. It was probably over a year before I paid it off, because I just didn't realise. I was like, thought it was like a free money card or something like that. So just now I have 5 different credit cards. I've got 4 credit cards and 1 charge card. I've got an American Express Gold Business Charge Card. an American Express Gold personal rewards card, a British Airways American Express rewards card, a Capital on Tap business credit card, and that same Debenhams one that I got all those years ago. I've always kept it. So why do I use credit cards for everyday purchases, you know, like fuel, food and all that kind of stuff? So when I was employed back in the day, when I was a spark and an apprentice, because I pretty much quit as soon as I qualified, there was a problem with my tax codes and all that, and like something happened with HMRC. Basically I had no records of ever paying any tax for a few years, so I had no credit profile. I had nothing on monthly payments minus like my phone, and it had no credit profile at all. Also didn't help that me and my dad at that time stayed in the same house and we both have exactly the same name, so it was quite confusing trying to get a credit profile. So when I got that Debenhams credit card, when I look back at it, it was kind of a godsend by accident, because all I needed to do was fill out that thing and they gave me it. There was no background check or anything, and that's how I started building a credit rating. Even though it was bad and I was misusing it, I was still getting a credit rating that I could use for other products. When I eventually paid that off, I managed to get my first car on finance. It was my old C-Class, and it was only like £11,000 worth of finance. I think it wasn't really expensive, but that was another thing that I could then use to build up my credit rating. So once I had that, I went, you know, one of my friends had an American Express card and he was talking about the points and all this stuff, and I was like, yeah, I'll apply for one. And I think I got one and the limit was like 1,500 quid. I know guys with American Expresses with like £50,000 limits, you know. Mine's are up to a total of about £10,000 now. They're not huge, probably still because of my age and stuff, but they're still really handy to have. So the benefits of having credit cards, if you pay them off appropriately at the end of the month, and charge cards as well, you don't really pay any interest. With American Express, you pay card members fees every year, but that's because the points are so valuable. And in my personal gold card, I've got just over £100,000 of Amex points. My British Airways one goes straight into my British Airways account, so I change all my points to Avios. So I fly up and down to London pretty frequently, and I pretty much pay pennies for business class flights down to London. When I'm going on holiday, say I was going to Dubai or going away with me and Shannon, my girlfriend, I can use those points to basically get cheaper flights and to upgrade to business class, and you get companion vouchers which you can use if you spend a certain amount of money. It's always dependent on what American Express card you have, but they are fantastic for points and the customer service is perfect. What it also then again allows you to do, if you use them correctly, is build that credit rating. So I got one American Express, used it properly, asked for another, got it, asked for another, got it, and then increased my credit limits from there. So you're kind of building rapport with a lender as well, because at the end of the day, that is what they are, as a lender. And American Express cards can be notoriously hard to get sometimes, so if you get one, make sure you use it properly before you try and get another. If you're not someone who flies, or if you don't really use American Express, most cards will allow you to use the points they accrue for cashback or to basically wipe off purchases you've made. So if I go to the petrol station across the road, fill up my car, realise I don't have enough money in my bank to pay for it, but I have American Express points, I can basically use my points to wipe off that purchase from my total balance at the end of the day. So if you're someone who, like I said, doesn't fly, or maybe you have a different type of credit card that has like a point system, you can still use those points towards something that isn't flights. American Express also do stuff like, you know, discounts with designer companies and like department stores and all that stuff. There's always loads of different kind of benefits you can get. I've always used mine for flights. Business credit cards again are great. Obviously my charge card, they're slightly different. If you don't know what a charge card is, probably Google it. I'm still not great at explaining it, but when I look at like say my Capital on Tap credit card, they're quite a small kind of like challenger bank style. Oh, not a challenger bank because they're not a bank, but a kind of challenger credit company. They're quite small, but those guys do 0% balance transfers. So if I have say £5,000 of movement of basically money to spend in that Capital on Tap card, I could transfer that to my bank 0% and go and use it. Which is really handy, especially if you're a small business owner and you needed that. Thankfully, I've never had to use it. I just use my Capital on Tap as I go. But if I was, say, £5,000 short on a refund for a project, I could go and then use that. That same Debenhams card that I've had is now, I think, £4,000. It's the worst card out of all of them I have. I don't even actually carry it in my card holder. It sits in a drawer upstairs, but it's always good just to have it. Between all my credit cards, I've got more than enough money that if I wanted to go and do, you know, one of the kind of non-traditional property transactions, I could go and do it, no problem. All that money there is enough to go and fund that. And if I somehow found myself in some type of difficulty, or, you know, my normal Visa cards from my personal and business account stopped working. You know, you've always got them there. I just like using those credit cards for everyday purchases so that I can clear my balance at the end of the month. One, it's great for my credit, which obviously benefits me greatly when it comes to property lending, especially because I've got business and personal products. If I want a personal mortgage, my credit profile is good. If I want a, I don't know if you just heard someone scream, but if I want a business product, I can go and use my credit rating for my business because I've got cards in both kind of things. So just to wrap up, you know, finance in general is a good thing. Like I remember at one point I pretty much put everything I had on finance. You know, I financed my registration plate. I think it was like £9 a month, but it wasn't because I needed to finance it to be able to afford it. It was because I wanted to have as many things on finance to build a credit rating as fast as possible. And that's probably why, one, when I cleaned up how I was using that Debenhams card, when I got my registration on finance, all that kind of stuff, it accrued enough of probably a credit rating that I could then go and get my first American Express card. So basically the reason I like all that is because of the points. I get money off. It helps me with like getting flights cheaper, better service. You know, I can if you have even better American Express cards than mine, I don't know if I'll change to a platinum this year, but you get, you know, concierge services and all that. It's a really good benefit. And same again with what I'm talking about with the cars, working capital. It's just good. Obviously, make sure if you go and get like an American Express or something like that, you don't go and just waste your like the money as if it was free and service the interest every month, because that'll fuck you up. And the percentage APR in American Express is very high. I think that's just part of, I guess, the luxury of having use of the cards and the services. So make sure if you're doing this, you understand that you're using it and you have the capacity to repay. Same with a car. Don't take a car you can't afford and default on the payments, because that'll affect your credit rating really badly, and probably for years as well. It's not something that just flashes in the pan and goes away. If you're especially a young person, but really any age of person, and you're looking to get some type of fast car or whatever and you're struggling, let me know and I can pass you on to my finance broker David at Oracle Finance, who sorts out all of my cars. He's been a great help with me in getting this car and obviously my new car that's going to be coming soon. Thank you for watching, everybody. Stay safe, stay smart, don't be a dauber. I said that in the last video, but I'm going to say it again. That might just be my outro from now on, and I'll catch up with you all soon.